Hey all, welcome to ShareTreck. This is Sandeep, and we're back with another fundamental analysis, this time with a channel favorite company. So let's get started. Welcome back, friendos. This video was actually inspired by one of Raj's year-end videos where he was talking about a lot of the genomics companies that have a lot of potential. Raj mentioned CRISPR, which is my personal favorite genomics company, but he also mentioned BlueBird Bio. And the reason is that these two companies, CRISPR and BlueBird Bio, are two of the big genomics companies with actual product revenue, which is huge. What a lot of the genomics companies actually strive to achieve. We had a video show a while ago about Gilead, which Gilead's journey to revenue was so long and so intense. And a lot of that echoes with blue. And that's why I'm wearing blue today. Blue, I'm blue. Um, so Bluebird Biosciences started off in 1992, and some of us were just wee little pups at that time. And since then, the company has incurred 4.11 billion US dollars in losses since its inception. But today, now in 2023, they finally have revenue. Although the big event, the big news for the company was the launch of Zintaclo and Skysana, in addition to, and part of my pronunciation, Lifegenia. And since launch of these products, since bring these products to revenue, it's a game changer. Um, and the company actually put out a very, very informative slide deck in just recently, a few weeks ago, when they were at the JP Morgan Health Conference. And I went through the slide deck, and I'm just going to highlight some of the slides, which I felt were very, very telling and very promising from not only a fundamental perspective, but also from a health perspective. So I've got by the way, you could find all of these in the investor relations section of BlueBird Bio. It's their 8K presentation. It looks, once you see something that looks a little like this, BlueBird Bio, JP Morgan presentation, you know you're in the right spot. But what was really intriguing to me, first of all, they're talking about their three big FDA approved gene therapies. This slide right here, how a lot of these gene therapy products go and make revenue is actually through a lot of the insurance companies, and how, which a lot of drug companies actually make revenue through insurance companies, what is covered and what is not covered. Now, those are vary from person to person, but right now, the company sees a lot of potential in those three drugs, especially this Lifegenia drug, which it expects over 20,000 patients in the near future, and they expect that number to actually increase, which is really, really promising in terms of a fundamental perspective. They address some of the companies, insurance companies that might imply a lot of reimbursement, a lot of coverage. One being the QTC network. This QT network over here, they get into a little more details, and you can see across this map of the US just how wide of a coverage it is. Now, this might not look like it's covering a lot of the US, but it's covering a lot of the populated parts of the US, which is nice to see, because for a company that needs revenue, and that's what all publicly listed companies look for, that's promising from fundamentally. It means they don't need to rely on us, the shareholder, as much, because there's a potential to rely on actual product revenue, which is a good thing. And it's good for folks who need the medical help. Again, these presentations are kind of a sales pitch, so we have to consider that when we're looking at this. But what I see was pretty promising. Now, what if we were to take a look at more of the fundamental side and more of the balance sheet and more of the actual cash flow, income statement, and the balance sheet? What is the risk? I went through that actually and found that the company announced on January 8th that it now has a cash and cash equivalent position of $275 million with a restricted cash position of 53 million. Restricted cash just means that this is cash that they must have set aside for a very specific purpose. They also touted that they claim to have zero debt on their balance sheet, which upon investigating is not entirely true, but is true where they don't have any interest expense. Very good thing, especially interest rate sensitive, interest rate heavy environment. But they do have debt owing in terms of their accounts payable and operating leases. But the fact that they're not borrowing at a very heavy rate is promising. It's nice. Another very important point is the company highlighted that it has a cash runway up until Q1 2025. So that is about, what is that, a year and a quarter, 5 quarters of cash before they have any issues. Very nice. I took a look at that and did a little bit of math and seems to check out, which is great. But the stock isn't doing too well. And why is that? There is a little bit of insider selling, which is something to consider, that the company, the CEO, the chief medical officer is selling shares, but not a blowout significant portion of shares, which is still promising. They might just need a little bit of money here and there. Who doesn't, especially in an interest rate heavy environment. But what is much more telling is I went ahead and, for the benefit of all of our viewers, with some help from some, here we go, with the help from some computers and other fun things, I went ahead and took a look at and put down some very important, very key points over here in an Excel document. And I can share this, by the way, to the benefit of all of our viewers out there. What you will notice here is, like I said, this company has been losing money, but something amazing happened over here in the latter half of this year, where product revenue started to come in. We can see their three main drugs, Zynteglo, Lavacell, and Skysana. They're expecting revenue from these sources, especially in the current upcoming year, this current year of 2024. They're expecting a large increase in revenue. Actually, I did a little bit of math, and assuming that these numbers do check out and this product revenue does check out, the company's going to be making 72 to 73 million dollars in revenue estimated a year, which is nice. And another thing, their OpEx, their operating expenses, it is improving. However, if you were to just take a look at some of these numbers, like their operating expenses numbers, and compare it to their revenue, you can see a very large discrepancy. Although they're getting their, what is it, 72 to 73 million dollars of revenue each and every year, they're going through about 86 to 94 million dollars per quarter in just operating expenses, which is significant. But we also have to consider that this is a company that is just beginning its revenue ramp and just beginning its revenue process. And a lot of those companies do end up losing money before eventually becoming profit giants, hopefully, like Gilead and some of the other big, big pharma giants out there. So that is why the company says they just have enough cash until Q1 2025 because they are losing and they're burning more money than they're coming in. However, I did also consider and look at where this money is. And what I did down here is percentage of revenue, looking at their R&D research and development and looking at their selling and administrative, general administrative. If you were, although it is pretty steady, like their research development isn't increasing that much, and their selling and administrative is staying rather steady. It's going up a little bit here or there, which after reading the financial statement, it said that that research into that general administrative SG&A, those costs were related to bringing their drugs like Zynteglo and Lavacel out into the market. So that is necessary. But percentage of revenue, if you were to compare, because their revenue increased by such a large portion, their costs percentage wise compared to the prior quarters, prior years, it's looking a lot nicer. So this is a very promising. And I could share this if you like. It's just a big summary of all their financial statements. I did also look at their financial statements, and I want to see balance sheet risk. So and we brought this up earlier when we were talking about debt. If we were to add up their cash and marketable securities and take a look at their short-term liabilities, they have enough cash and cash equivalents to just take care of all their short-term liabilities. Their long-term liabilities, a lot of those are just leases and some of these fixed costs, which they need. They aren't that significant. And considering a few profitable quarter revenues, the balance sheet risk isn't too high from that perspective. But because it's a money losing company, because of that very high OPEX, operating expenses, that is a big deterrent for a lot of people. Another deterrent for BlueBird Bio is the company is trading at a very small number. And this is not the fault of BlueBird Bio, but if you're trading very, very cheaply, it brings risk from some of the markets like the NASDAQ or the New York Stock Exchange, where they could say, hey, we could delist you if you're trading too cheaply, so you got to do a reverse split. And that's not good for shareholders. That's another risk you have to consider. And there is a lot of optimism, however, with the company, which is, again, the low balance sheet risk. I say low because there is still balance sheet risk because their OPEX is greater than their op revenue. But if we were to take a look at their lab equipment, their lab equipment expenses, those are going down. They're able to use some of their research and development lab expenses from prior quarters and just keep the same sort of use of the same products, which is nice. And I was having a discussion with Raj earlier, and he told me that very, very good point, by the way, that there's nothing in the pipeline for BlueBird Bio. That is true. And that's why the research and development is not as not as expensive as some of the other genomics companies like Intellia or Beam or CRISPR, which are the big three pillars, in my opinion, but that's a story from another side. Because there isn't a lot of development of new drugs in their pipeline, one thing I did read is the company is focusing mainly on the US right now, but it wants to expand into Europe, particularly the UK, especially in this Eli cell drug. They currently have market authorization, but not approval. But they have approval over here in the US. So that's nice. which means that's promising. It's promising they're looking to optimize, to bolster their current drugs and current treatments and kind of perfect those and sell those not only in just one market, because there is risk of just having one market, but across other markets. And that's nice. So if we were to think of this company, BlueBird Bio, company that has 3 very, very appealing drugs, it has revenue. Revenue is growing. It has a very high cost associated, but it's becoming much more efficient with some of their SG&A, some of their research and development, and some of their lab expenses coming down, and it has no debt, no expenses. If we were to consider all that, is it a company worth investing in? I can't make that decision for you because everyone is his or her own person, but some things to consider are the company is not expected to be EPS revenue positive for quite a long time. In fact, I looked up until December of 2026, and we still don't have a positive EPS. So that's something to consider. But the fact that the revenue continues to grow. In fact, if you just look at this quarter to the prior quarter, we saw a 57 improvement, although still a net loss in revenue. And now 72 to $73 million in revenue a year. OpEx is high, but if interest rates do come down, maybe the company can borrow some and use that to push their drugs further. A lot of this is dependent on some of the drug plans. A lot of this is dependent on the consumers and FDA approval. And a lot of things can go wrong, but that's promising. Is it worth investing in today? It's worth looking at, in my opinion. It's worth considering, but it is very high risk. In fact, just in one day on Friday, we saw a 9% drop in share price. So very volatile stock, very cheap stock, but there's potential. And so that's something to consider. Revenue improving, but not going to be positive for a while. And when that 2025 rolls around and they start to run out of cash, they could borrow, they could issue debt, maybe at a lower rate, but that's something to consider. So that is a quick fundamental analysis of BlueBird Biosciences. I am thrilled to see more and more genomics companies get revenue positive. So hope we see more of this, and hope things work out for BlueBird Bio because the company, it's improving. Now, I want to get some more feedback. I want to get a second opinion about a man who's been covering blue, has been on a big blue train for a while now. And that is the man himself, Raj from ShareTreck. Raj, what are your thoughts about BlueBird Bio? Can you shine a little bit of light? Talk about maybe their drugs and what do you think about their revenue and pipeline?
Yeah, that was a tremendous introduction, Sandeep. I feel bigger than myself. Thanks for the boost. Yeah, it was very interesting to see your analysis because I had a feedback recently from a subscriber who said that you are very obsessed with blue. And I thought he was right because at one point of time, like you mentioned, I had invested in blue and I had great hopes and it didn't work out. So probably I have been a bit harsh, but what you said looks good. I wanted to just bring in the TradingView platform and share that with you here. And I think there is a little bit of a surprise that may come up for Blue. For example, if you look at this here, this is earnings and revenue for 8th August 2023 for the period ending June 2023. So they had an estimate of 0.75 negative EPS, and BlueBird came in at minus 0.67 negative EPS.
Wow.
They had estimated 11.3 million revenue. BlueBird came in at 6.89 million. So they did better on the EPS front, but note the number, it was minus 0.67 that was reported negative. Then fast forward, in the next quarter, ending September 2023, the market expected them to do minus 0.669. They did minus 0.66 for EPS, just 0.009 below the expectations. But when it came to revenue, they did less than what was expected, almost $1 million less than what was expected. Now, still, I'm looking at the EPS here, okay? Now, if we go here, and if we look at the EPS estimate, it is minus 0.649. And revenue estimate is 17.505. So if you look at the previous quarter, it was 13, and now it is 17. So we are looking at just 4 million extra from Zynteglo, SkySona, and LifeGenia, all three of them, right? And I'll just go to BlueBird, and this is their pipeline. So this is basically Lovocell, formerly lentiglobin for sickle cell disease. So I don't know how much research they are going to do for this. This may be in the phase 3, giving some information. I don't know if the pipeline is updated. So this is something that I am a bit puzzled about. But coming back to what I was saying here, they shouldn't be having too much of research expenses unless they put something in the pipeline as candidate, preclinical candidate, where they are doing research, right? Or I would expect that in the next quarter, they announce that they are scouting for partners for new targets. So maybe instead of putting the target out there and searching for a partner, maybe they search for a partner and agree to do work on the target that they are keen in. So one of those things can introduce another element in the pipeline, because a company which is into therapies, which are limited by patent, if it doesn't come with new drugs in its pipeline, it will have problem. If you had seen my latest video about M&A activity in our biotech, basically many big pharma which have got thinning pipelines, they are taking over companies to replenish their pipelines, because as your patent expires, generics will start coming in, and you will have to have new revenue. I mean, the quality of revenue that you have to maintain your EPS, to maintain your dividends, and all those things, to maintain all the parameters, and hence the valuation of the company. There has to be new candidates in the pipeline. So when you look at a pharma or biotech company, you look at how big and wide is the pipeline, how many collaborations do they have, how many of them are close to monetization, and then you look at all the monetized medicines, how much of patent is left for them. So these are some of the key aspects that you look at. So from that perspective, I think BlueBird probably might make moves in the next quarter, announcing new candidates in their pipeline, I hope. If they don't do that, then we have a problem with the valuation, because the therapies that they have got are going to compete with CRISPR and potentially Beam before their patent gets over. Editas might also come up with sickle cell disease. They have got I think Edit 301, if I'm not mistaken. So if those therapies also come in, there's going to be competition and pricing pressure. So unless they have extra candidates in the pipeline, most probably they would be a takeover target, if, in my opinion, because they have these monetized therapies, which they have worked on for a long period of time. So these are companies which have got very, very low value, and with low value, it will be volatile because people will be trading them like penny stocks, like guys who don't even know genomics might be buying it based on the fluctuations and dumping it. So all those things influence. And finally, one of the other things would be that if there was any fund company or something which wants to invest, they won't even look at these shares which are, at subpar level in terms of pricing. They would look at something above $5, if I'm not mistaken. And so those opportunities are not there. But if they put something in their pipeline, and if they expand to Europe, and in the next quarter they show better EPS, which they can, in my opinion, they could do better earnings. It is showing negative 0.097, which is quite challenging for Blue, considering that in the last one they were minus 0.16. However, if the CEO was to tighten the belts and somehow manage to achieve this, then you can see the share price coming up, and things will start improving from there onwards.
A lot to consider for the next earnings. See if they have another product or if they can go into another area, because that'll help diversify and keep their revenue stronger. So good considerations. I didn't think of that. Thank you for bringing
No,
that up.
we as retail investors always have to talk to each other. Now there are professional analysts who may have access to real-time data, insider information from company. When I say insider information, I'm not talking about unfair advantage or anything illegal. I'm talking about the ability to pick up a phone and ask for some data which is not prevented by SEC from being shared, or asking some questions, going and looking at their plant, talking to their employees. Those kind of things can be done by analysts, which we can't do, right? And we don't have access to real-time data and stuff like that. So we are always going to miss some parts of the picture. That's why I keep on requesting our viewers also to actively engage in the comment section, because some of them might be working in this field and may have information that we don't get to hear because we are not biotech professionals or gene technology professionals. And they can give us some information. Some might be working in trading shares, or have been trading shares for a long time and have a better understanding. They can share information.
Yeah. Hey, maybe
It's
some of
collaborative.
our viewers are invited to the JP Morgan health conference. If you were, let us know.
Yeah, if anybody attended the JP Morgan 2024 conference, yeah, just put the brief comment where we would like to interview you and ask you what your experience were and what you felt about all the presentations. So I think, Sandeep, that brings us to an end of this video, right?
Yeah.
Yeah.
Great video, fun company, a lot to consider, a lot to watch, and maybe something to invest in if some people feel bullish and feel willing to take on a little more risk. High risk,
Okay.
high reward.
Yeah, take care, guys. And I hope all of you enjoyed this video. And friends, from the genomic side, I just want to let you know that we have begun the process of moving the HIV content from this channel. This channel is going to remain purely genomic investment. And we have already started putting an extra copy of the HIV videos that I publish here in the Global HIV channel. And many HIV subscribers are already gone and subscribed into that channel. So we're going to spin it off separately. So this will be a pure investment channel, and we will try to give you content every day of the week. And of course, Sandeep is here with me, and he's helping me with the Monday slot. And if any of you are interested in contributing to ShareTreck, please reach out to me. Go to the sharetrek.com website and contact me through the contact form, and we'll work things out. And again, thanks a lot for keeping us on the air, because we have so many subscribers who are coming to us, and also people like Sandeep who are not only subscribers but also contributing. This channel is going well. Initially, I was alone in my basement, beaming out to maybe 1 or 2 people, and now we have 5,000 plus. So thank you, guys. Keep it coming. Take care.
Bye.
See you later.